Welcome to the SNN Network Summer Virtual Event. We are pleased to introduce the next presenter to today's event, Evan Sohn, Chairman and CEO of Recruiter.com. Evan, the floor is yours.
Hey, thanks so much, Kai. And I want to thank Robert Kraft and the entire SNN team for putting together what has really just become an incredible conference. I used to attend it. So I was on your side of the microphone, if you will, on your side of the screen, and now I get to present as well. So very, very exciting. A little bit of a disclaimer. So hopefully you're not just tuning into the audio, you could see my screen. And I'll be taking questions at the end. So probably about 15 minutes of the pitch, and then we can open to the floor for some questions. So typical disclaimer. Recruiter.com. So it's a name that you've probably heard of, though you probably don't even know that you actually knew it, because it is one of those brand names that really is just a billion-dollar brand. We went on Nasdaq. We've been trading on Nasdaq since June 30th, so we're about 6 weeks old on Nasdaq. The symbol is RCRT, and there's a warrant as well, RCRTW. And what we are doing is really reinventing the entire recruiting space to really meet the needs of this unprecedented job market, where it's finding harder and harder and harder to find skilled labor than ever before. And companies, large and small, and we'll talk about some of our clients, but they need a new way to acquire the talent that they need without the pains of hiring full-time salaried recruiters or the cost of using headhunters where you have to pay 20% of a salary. So why is this happening? So let's take a look just for a moment at what is the recruiting industry today. So there are two choices when we talk about recruiting. There's doing it yourself or retaining a recruiter. And no matter what you do, the process is the same. You find a candidate, you engage the candidate, you screen the candidate, and you hire the candidate. So if you're going to do it yourself, you're going to use LinkedIn and ZipRecruiter or Indeed. In the old days, you put an ad in the classified ads. And that's how you're finding the candidates. You're then engaging the candidates and screening the candidates and hiring the candidates. The other alternative was to actually use a headhunter. Let's go. I'm going to go use a headhunter. I'm going to give the opportunity or the job requirement to 15 different headhunters, or 3 or 2 or 1, whatever it is. And I'm paying that headhunter on success only. That was the model. This does not work anymore in today's economy. And let me make a better statement. This is no longer appropriate in today's economy for a variety of reasons. So if you look at the statistics now, and you're seeing on this slide now a variety of statistics, in the post-COVID landscape, we're about to see an unprecedented, and I hate using that word, job market. So on the one hand, if you look at the bottom left, you're talking about the average turnover by industry. So even in the financial services sector, it's about a 16% annual churn. That means that your employees, if you have 100 employees, 16 are leaving annually. In the retail space, it's around 30%. The average is actually between 22 and 27%, but analysts all predict that number is going to skyrocket in a post-COVID world for a variety of reasons. I want to work remote. I don't want to work remote. My office shut down. I only want to work. Work hybrid. I don't want to go back full time. I want to be a freelancer. Or my company is no longer hiring my group locally. They only want to hire remotely. Whatever that reason is, or I've been waiting for COVID to end to leave my job. Everyone expects that in the skilled labor market, this is the age of the candidate. A skilled candidate can go wherever they want. At the same time, we have an unprecedented talent shortage when it comes to hourly workers, right? There are more jobs open than people looking for jobs in the lower skilled rate. This is this crazy environment here now. So if a person's not going to stay at a company in those 5 to 10 years anymore, and I ask all the time, 2 years ago, if you saw a resume for a 30-year-old and they were at the same company for 10 years, you would say loyal, committed, steadfast. Today, 2 years later, you see a 30-year-old with 10 years at the same company, you would say stale, risk-averse, not willing to take new challenges on. The whole world is different. So paying someone 20% of a salary when that person's not staying there for 5 to 10 years, or B, when you have double the number of people that are leaving now to actually fill those spots, that's not what you want to do. And what you want to do is really what we provide at Recruiter.com. We provide a platform for on-demand recruiting solutions, whether it's on-demand recruiting people, on-demand recruiters. We have 30,000 recruiters on our platform today. They're available to be placed on assignment as a freelancer. Think of it as Uber for recruiters. And we have incredible artificial intelligence, candidate search and engagement tools that help build candidate pipelines leveraging these tools. And together, this becomes an incredible power where we're delivering to companies large and small tools and recruiters to work the tools and fill the candidate slots up. I am backed by an incredible management team, including first-rate CTO, CFO, really across the board, an entire great department of people able to actually deliver. We've been delivering. We actually had our first Nasdaq earnings call earlier this. We did the call last night. We released our earnings on Monday. We grew 38% quarter-over-quarter growth, and in our core business, our on-demand business, we actually grew 88% quarter-over-quarter. Just a phenomenal. I'm seeing some questions now, and I'll address those questions at the end. So just an incredible management team that gets us to where we need to be, an incredible governance and board. We recently added the former CTO for IBM's AI group, Silicon Valley M&A guy really on the financial side, and just an incredible team of people. We have an incredible customer list, whether it's Zoom or ADP or BetterHelp or many others, top name companies. We actually have over 200 customers today. Our small customers are spending about $1,000 a month with us. Our large customers are spending over $100,000 a month with us. We have recurring revenue from our on-demand tools and on-demand recruiters. That's what we're delivering. We have an incredible tech stack. Ranging from job boards like ZipRecruiter and Indeed to curated pools of talent to video interviewing technology, centralized pools and AI sourcing to help build these candidate pools faster. Because at the end of the day, what every hiring manager wants, and our ideal customer profile is the global head of talent. And what they're looking for is how do I fill those seats faster? How do I recruit talent faster and better? And we're able to do that with our tools and technology. But we're also able to extend the in-house recruiting team with on-demand recruiters. We have an incredible, unlimited supply of recruiters. We run the largest network for independent recruiters. And we're able to deliver these recruiters fast and furious to our clients, large and small, and giving them tools if they need them to really recruit talent faster. We've had incredible year-to-date accomplishment. We, like I mentioned, 38% quarter-over-quarter growth between Q1 and Q2. Our margins increased from 28% to almost 33%. We uplisted on Nasdaq. We have cash in the bank. We have over 200 recruiters out on assignment now, and those recruiters don't work for us. They're all freelance recruiters like Uber. We're providing an Uber service for talent acquisition like none before us. We are reinventing the recruiting industry to meet the needs of the post-COVID economy. We have added great clients like Pfizer and Moody's and many others. We've done some great acquisitions that really brought in great talent and great technology and great customers to our actual platform. And if my voice sounds familiar, if my name sounds familiar, I've actually been on CNBC and Yahoo TV every month talking about the jobs market since the actual pandemic started. I mentioned before our network. We really are an absolute destination site for all things recruiting, as you would expect from a company called Recruiter.com. Over 3 million social media members. We run the largest network of recruiting and HR professionals on LinkedIn. $3 million plus of organic traffic, 48,000 Twitter followers. We have an incredible billion-dollar brand, and we're just getting started now that we are a startup company on Nasdaq, and we really expect great things from this overall exposure. We've also used this opportunity to really become the voice of the actual recruiting industry. I've been on CNBC now every month, right before the jobs report. We have a recruiter index where we survey our recruiters and we talk about what's going on in the job market. I'm on Yahoo Finance Television talking about the jobs. I've been on Cheddar doing podcasts as well, as we really are the ones talking about what's the future. They actually asked me the other day to muse on what we think is going to be happening in the overall industry. And this is really the responsibility that we have and the opportunity that we have as a public company. Just looking a little bit at the numbers that we showed, we're sitting at around $9 million in cash, about 60 people, full-time employees. The deal that we did, we have about 14 million shares in the float. 14 million shares outstanding. About 4.5 million of those are in the float itself. Insiders and affiliates own about 40% of the company, something like that, mostly locked up. About 9 million shares are actually restricted. And most recently, we're trading at around $4 and change with a market cap hovering around $60 million. What we reported on our financial results, just fantastic overall growth. 38% quarter-over-quarter growth, which followed over 30% growth from Q4 to Q1. And you can see in the slide on the right the breakdown of our different revenue buckets. Our software revenue, which was $0 a year ago, is now at $175,000 of recurring revenue. The orange is our on-demand business, growing at 88% quarter-over-quarter growth as we're really expanding to meet the needs of our customers. Truly an incredible opportunity that we have over at Recruiter.com. And finally, just a closing slide, and then I can open up the floor for questions. Companies need a new way. Right now, what COVID and the post-COVID has really introduced us to is that the need for talent is fast and fierce. And companies need a new way to drive consistent talent pipelines. Our clients have one thing in common. They all have the need for lots of talent. We don't do executive recruiting. We're finding Java developers for one client. We're finding scientists for another client. We're finding licensed therapists for another client. We're finding truck drivers for another client. And we're doing this with our tools and our people, because companies don't want to use headhunters to fill these important roles that are actually significant, that have grown in significant volume. And many companies actually decimated their overall recruiting department at the beginning of COVID. And now they're scared to actually scale those back up, but a lot of those recruiters don't want to go back up. In fact, the latest report shows that there are more open jobs for recruiters in this country than there are for software engineers. Let me say that again. There are more open recs at companies for recruiters than there are for software engineers. And we at Recruiter.com, and I invite all of you to join RCRT, have the opportunity to be that source of recruiters. We already announced that we're opening up a job board soon to actually take advantage of this overall trend of hiring recruiters. We do that now with our on-demand recruiters, where they go from an on-demand to actually hired. We've seen that occur, and we love that. We love when our recruiters are sought after by these companies. So people ask me about disintermediation. I see one of the questions about that. I love that opportunity. It means that people love our recruiters. Our clients love us. About 3 weeks ago, I did a customer tour, and while most people don't like their recruiter, our clients love us. We're seeing expansions from small companies expanding. Our large clients are expanding. Our churn, we don't report on our churn, but our churn is incredibly low. Our churn is only when the project is actually over, and we're seeing that happen in some of the smaller companies. But companies need a new way to do this. And we're able to do this by letting them extend their in-house capabilities. So if it's a small business that just got financing looking to hire 20 people, they don't have anyone. They don't have an in-house talent, a talent acquisition person, and we're playing that role for them. Or large companies where we work directly with the global head of talent, and they need 5 recruiters or 25 recruiters to help fill the seats that they have open today. And the tools that make that happen, fast and furious, using our AI technology that gives us access to over 1 billion records. That's 1 billion records across all of LinkedIn and then some. We recently announced that we added diversity filtering, so we can actually deliver sales associates that meet certain diverse criteria. We're able to do that as well. All part of our tool set without any long-term contracts. Our clients sign on demand like they do at Salesforce.com or like HubSpot or like Zoom, just on demand. And that's why clients love us. So I thank you. I welcome you all to join RCRT. Again, that's Nasdaq, symbol RCRT. And I'm going to open up the floor for some questions. Let me actually go to the questions themselves. First question is, who do we compete against? Again, the recruiting industry is a $120 billion industry. It is a giant fragmented industry. So yeah, for the most part, we're competing against the folks that want to do it themselves. That's probably the biggest, competitor, right? So the in-house, that's why, our ideal customer profile is a global head of talent that has this constant need for talent because they need more people working on those as well. So I think that really gives us, there's another question about what makes us different and unique. Again, what we actually do, and you might have read about, there's some Silicon Valley tools that provide AI search. We have that entire tool set. So we really are unique is that what we combine is the tools with the people. Because at the end of the day here, what our client really wants, are, to be coy, butts in seats, right? They want us to fill those candidate roles. No one wants to learn a new tool to help find candidates. They want someone doing that for them, because at the end of the day here, no one's hiring anyone off a computer. AI is not hiring anybody. AI and tools might line up the candidate. They might help you screen the candidate. We've got great video screening technology. But at the end of the day here, no one's hiring anyone without speaking to them. I don't care whether you're hiring the CEO of a company or a dishwasher for a restaurant. There's someone actually speaking to that person before they're hired. And our goal is to enable the old 80-20, that it shouldn't be 80% of the time spent finding the candidates and 20% of the time talking to them. It should be that we spend 20% of the time finding them and 80% of the time in conversation. And that's what we're delivering to our clients on a day in and day out basis. Next question. What are we burning on cash, and when do we expect to be profitable? So we actually reported our loss for Q2 was actually less than expected from my perspective. So we're burning less cash month over month. We had committed to our board at the beginning of the year that we would uplist on Nasdaq, have some cash in the bank, have a scalable revenue model. We've been growing 30% quarter over quarter, and our goal was to hit be P&L neutral by the end of the year, and we're still tracking against that very closely. So I hope that answers your questions. Another question, why is your stock so low now? Very nice. Thank you for being so forthcoming. So we were an OTC company, and our investment banking firm, as well as our board, really felt that they preferred to have a successful uplist for the folks participating in the round. Joseph Gunner led the round. They did a $5 unit, which was one common and one tradable warrant. The common was at $4. The warrant was at $1. And that's hit as high as $7. So we're trading. If you combine the warrant and the common together, it's over $5 now. So they're all pretty happy. We did take a haircut on our overall valuation, and we're going to grow up on Nasdaq. And we're very excited to have the opportunity to really grow up on Nasdaq as a small, high-growth company. I think if you look at our peers and you look at companies that are in a hot sector like the job market, as well as the technology side of business process automation like DocuSign, you look at the freelance economy like Upwork and Fiverr, you look at companies that are running marketplaces like Zillow and others, we really combine all of that together under a brand name that's really a billion-dollar brand name, Recruiter.com. And if you thought about it, in the pre-pandemic or at the beginning of the pandemic, you start to say, gee, companies like Zoom and Peloton and DoorDash, they're going to be the victors of a shutdown. Well, what companies are going to be the victors of a reopening? And if you look at what's going on in the job market today, it's the companies involved in jobs, whether it's training, whether it's upskilling and upskilling individuals or training individuals, or companies like ours. We're really at the epicenter of all that's moving on in the job market. So thank you for those questions. That's really good. I think I got all the questions. Let me just refresh again on the questions, see if there's anything else. I am from New York, so I tend to speak quickly. Anyone who has any additional questions, feel free to reach out to me at Evan at recruiter.com. That's Evan, E-V-A-N, at recruiter.com. Again, the symbol is RCRT. I'm going to give everyone back 12 minutes. So thank you very much to Kai, and again to the folks and our partners over at SNN. Really appreciate your overall support, and looking forward to the rest of the conference and the conference series. So thank you very much, everybody. And Kai, I'll turn it back to you.
Ladies and gentlemen, that concludes the Recruiter.com presentation. Thank you for joining us. You may now disconnect.